And with that, I would like to call up our Guernsey folk. Unless the mayor, did you have anything to say? Let's call up the Guernsey folks. I have the paper with their names on it. CEO and President Suhas Padaran. Pardon, thank you. Senior Vice President Jared Stiggy. Managing Consultant Bernie Severa. All right. And these gentlemen are at your disposal. Do we have any questions from the media or from the rest of our audience here?
Questions. I don't know if this is told to you guys or to the county, but what would be any possible timetable for the implementation to this proposal?
Timeline.
Please.
Oh, sure.
We got the microphone, sir. Thank you.
So timeline.
Who are you?
Oh, sorry. Jared Stiggy with CH Guernsey and Company. The timeline is highly dependent upon which path forward is chosen and how much partnership you see from the utility on whether it's interested in pursuing that path or not. So when you have willing parties on both sides and large agreement on the terms, you can see transactions move forward on a very quick pace. I would say you can see this done in a year or two. If you have a lot of resistance, the timeline can lengthen, and we have seen things take 5 years or longer. So at this time, it's quite unknown. I think what the mayor announced in moving forward into the second step, the county will be doing quite a bit of diligence in what is the desired path forward, and then we'll be able to develop a more concrete timeline at that time.
Thank you.
I know you looked at the whole county. To what degree did you look separately at the fact that we have 3 islands? And are you anticipating that these would be joined together by cable, or would each one sort of have its own co-op?
Yeah, so currently the recommendation is somewhat split between Maui and the other 2 islands. The independent system operator would be the most effective on the island of Maui. Whether or not that entity would be ideal for the 2 smaller islands is uncertain. As far as whether you move forward with a municipal utility or a cooperative utility, obviously if you choose the municipal route, that would need to be a single entity operating across all 3 islands. If you were to go with a cooperative route, you could have one co-op for all 3 islands. You could have one co-op for one island and one that would handle 2. You could have a separate co-op for each island. You could have multiple co-ops on any island. The number is really up to the prudent decision of the county's government.
On the second page of your executive summary, it says that the third party could expect to pay between $525 million and to $867 million. Under any of these scenarios, would the Maui County taxpayers need to cough up this money?
Well, this is the investment that the new utility would need to make into purchasing those assets. So by making that investment, the utility would then need to recover its investment from the ratepayers. So whether you say taxpayers, I would say not the taxpayers directly, but to the extent that the taxpayers consume electricity, they would be paying for those assets through their purchases of electricity. Now, that being said, the ratepayers are currently paying for those assets because the $525 million number is the estimated net book value of MECO's existing assets. So when you pay your electric rates, there's a component of your electric rate that covers the capital cost, which is that net book value. So the returns for that investment that MECO has made are currently being paid by the ratepayers. If a utility purchases those assets and pays dollar for dollar, the customers of that new utility will then be paying for those assets, but the amount they're paying does not change. They're just paying it to a different entity.
So could you argue that Maui ratepayers have already paid for this through their rates?
They are already paying for it, and they will continue to pay for it as long as they buy electricity. So that is not going to change. Maui ratepayers will have to pay to whoever is the owner of the distribution network. Now, one thing that our study pointed out, that there are some inherent advantages of what we call public power ownership, which in simple terms mean either a municipal-owned or a cooperative kind of organization, does not have the profit motive that MECO has, for example. They don't have to pay taxes. So just simply based upon what could be the savings under a different kind of ownership, we pointed out in a big picture that currently it looks like you could save up to 6%. But that could be just the beginning of the savings. There could be additional possible savings if the new entity can manage the fuel sources more effectively, if they can manage the labor component more effectively. So I would say that the initial percentage that we calculated is somewhat conservative. The actual benefits could be higher. Now in all these, I need to let you know that there is one unknown. A big part of what you may be able to save is based upon what happens in this transaction, because we have a seller and a buyer.
Your question was, haven't the ratepayers already paid for it? And the answer is the net book value is essentially the amount of investment that MECO has made that has not yet been paid for by the ratepayers. So their actual investment has been in the billions of dollars, but a lot of that has been amortized or depreciated over time. So the 525 is, think about it as the amount that has yet to be paid down by the ratepayers. Now, that is based upon a book value. A book value is not necessarily equivalent to what the assets are worth. For example, if you have a generator, it could still have a book value, but it might not. It might have very little actual economic value. And so in that case, that would be an example of where the county would try to argue that they shouldn't even pay book value for something. They should pay a much lower value because that generator, while it may not have been depreciated yet, is not the type of generator that we need moving forward into meeting the targets of 2045. But given the information that we had available, net book value is a common basis around which utilities negotiate transactions.
To what degree are you depending on the fact that if this becomes let's say a co-op, that you will not have to be have unionized workers, and that the savings from that, if the workers in the co-op were unionized, would the benefit still be there?
Yeah, so for calculating the potential 6% savings, we tried to keep it at a very high level. So we assumed, for example, that there would be no efficiency in labor costs. We assumed no efficiency in procurements. The only two efficiencies that we assumed for purposes of the study we provided were that they would not be subject to income taxes and they would have a lower cost of capital because they are not trying to meet a profit objective of the shareholders. So those two efficiencies result in the 6% estimated savings. If they're able to attain additional savings through more efficient labor arrangements or things of that nature, more effective fuel procurements, for example, those would be over and above the 6% that we estimated, which is purely based on taxes and cost of capital.
You mentioned generators a moment ago, and would that would operate on what kind of fuel?
It really depends. I mean, if you're wanting to move towards the requirements of 2045, if you're needing firm power, obviously fossil fuel is the common answer that you would hear across much of the country. For here, you'd probably be looking at something like a biofuel that could be produced locally. And all those details would be sorted out during the phase 2 of this effort. But the fuel choice would be something that would be decided upon based upon input from the local community.
But would you agree that no matter what, there's going to have to be some collaboration or with alternative non-firm power, like wind and solar, which doesn't, it's up and down.
Sure.
And then in combination with a firm power.
Correct.
Whether it be fossil fuel or some kind of biofuel.
You could do biofuels, you could look to batteries, you could look to pumped hydro. There are other emerging options in that regard. So these are some of the details that need to be worked out in phase 2. But absolutely, you're a peaking island around 7 p.m. You're certainly not getting much solar production at that time. Wind is intermittent, so you do need that firm power capacity. The question is, how do you provide that, and is it ideal to do that with fuel oil fired generators that aren't very efficient, or in the long run, are we better off in looking to some other alternatives? And that's the type of thing that the new energy commissioner and the county will be working on over the coming months.
I was going to ask a question about whether you looked at something in your study. Maui County now receives income from Maui Electric through the public service company tax and also the franchise tax. The combination of those two in 2015 was $20.55 million.
Mm-hmm.
So if MECO goes away, then what happens to that income?
It really depends on what the county chooses to do. We consult to the city of Oklahoma City, which operates water and wastewater utilities much like Maui County does. In our community, we choose to actually assess that tax upon the utility. The utility pays it to the general community coffers, and then those are allocated through the budgetary process to other areas of the city. There's no reason that tax or that payment would have to be levied upon the utility. It's entirely upon the choice of the city government and how they choose to arrange their finances. It's really at the county's option.
So I just want to make sure everybody gets a chance. I saw some hands in the back.
I wanted to ask, did you look at how we would be served if NextEra Energy is that part of your study, if we were to be taken?
We looked at that, and the recommendation that speaks to the independent system operator probably most squarely addresses that. And so the independent system operator acts as a third party that does two primary things. One, it makes the decisions as to what energy is dispatched at any given time, and it provides clear and transparent price signals so that not only existing power producers can understand the market, but so that new entrants who might want to develop new renewable resources understand what sort of market they would be getting into. That's one primary function. The second primary function is, right now with MECO, or if the transaction goes through and NextEra were to own the transmission and distribution system, they are the entity that makes the decisions where the system is upgraded, where it's expanded, and those decisions directly impact the ability of the grid to absorb renewables and the ability of the grid to not have to curtail wind power even when it's being produced. So under the ISO approach, the independent system operator is making the decisions as far as planning the development of the distribution and transmission system. They decide what areas of the island need to be improved. MECO or NextEra would be the ones to actually construct those improvements, but the planning is being accomplished by this independent third party. And so whether you have a municipal utility, a cooperative utility, MECO, NextEra, whoever happens to be actually owning the wires, it's this independent entity that plans for that infrastructure.
Can one of you talk about how many times this has happened successfully nationwide, where we've gone from to like a co-op or public? This is not the first time. Could you?
One of you two cover that?
I mean,
Yeah, go on. Yeah. If you want.
oh, I've got it. My name's Bernie Severa. I'm a managing consultant with Guernsey. Actually, in 2015, I worked with an entity in Wyoming. The investor-owned utility had a franchise agreement, and we passed legislation to form a municipal electric utility. And this was in 2015, so fairly recent, probably about 7 months ago. It's not totally common, but it does happen. And usually there's an instance where the investor-owned utility rates are very high, and the municipal has figured out that there's a way to provide the same service at a lower cost. So I worked with an entity in northern Wyoming in 2015, and we formed an electric utility. Now, we haven't actually constructed the wires, but we are working on a qualifying facility, which is a hydro project, a small one. And that will connect. That will be the first connection to the grid. So we'll actually start to self-supply some energy as soon as that project is finished. And a qualifying facility is a renewable project under something that's called PURPA, the Public Utilities Regulatory Act of 1978. So the utility that we're working with is cooperative because the federal law allows for a PURPA qualifying facility that's renewable to connect to the grid. That'll be our first step in forming the electric utility.
I think probably most similar to what's taking place here in Maui County would, if you looked at Boulder, Colorado. You know, that was a municipality that had, you know, their electric service was fine. Their prices are certainly nowhere near what you're paying, so the customers weren't really dissatisfied with the cost of service. But Boulder wanted to make some bold and aggressive moves towards integrating renewables, and their view was that their current electric provider was not the right answer to accomplish that, and so they moved forward. And you know, theirs is an example of where you don't have a willing seller, and so it is encountering some headwinds. But I would say that is probably the situation in the U.S. that's probably most close to what's going on here in Maui County.
Anyone else? The Guernsey folk will not be here forever. This is the chance to ask them questions directly. At some point, their contract will be over, and you'll have to ask us, and we are not as knowledgeable. But we're getting there. If there are no more questions, I'd like to thank you all for coming to our press conference. As we said, Tina said, we've got Guernsey report copies right over there. I've got copies of the proposed bill, which again, it's the first draft. It'll go through many changes, so just be aware of that when you're doing your reports. If we run out of this, I can email it to you. It's 30 pages, so I'd rather not have to print any more copies. Thank you for coming, everyone, and have a great weekend. Aloha.